Hello, everyone. Welcome back to Reimagine 2021, version 11. So we've been doing this free virtual conference for the past year or so. I'm Roshan Mirajkar. I'll be your host for this event. Really excited to be back here after a while and excited to speak with Mathias, who's a global marketing strategy at OpenOcean. Mathias, great to have you here. And before we get into talking about a lot of the market structure, the latest technological innovations, would love to hear your story about how you initially got into the crypto space.
Okay, sure. Yeah, hey Roshan, hey everyone. Super excited to be part of Reimagine 2021. So I've been in the blockchain crypto industry and space for around 5 years, and it all started off that I started to see all these things going on YouTube and read all these papers and so on, and I really liked the idea about having basically your own control of your own assets. So I started to invest a bit in some Bitcoins and Ethereums, and then it basically rolled from there. But at that time, I was also working as consultant, and several of our clients, they were asking about blockchain, so we started to build some concepts around that. Then later on, I joined one of the big infrastructure projects. So I helped design, do architecture for protocols from a very early stage. And most recently, I was CTO for a small Japanese blockchain startup, which is building their own proprietary protocol for digital identity, which I was doing for around 2 years. And around a year ago, I joined OpenOcean, where we are building DeFi aggregators, and I'm excited to talk about that.
Yeah, it's really interesting. You've obviously been in the space for a while. You've seen a lot of the problems, and that's why I'm really excited to talk about OpenOcean and learn more about why you guys are even building some of these products. What are the different ways users can use it to really benefit their current strategies, but also new innovations. So first, let's get started with explain to us, the audience that's watching this right now, what exactly OpenOcean is, and maybe what are some of your key principles that you think while building?
Sure. Yeah, so OpenOcean is a full aggregator. And what that basically means is that we aggregate CeFi and DeFi. So that means we aggregate centralized exchanges and decentralized exchanges. And what we're trying to do with all this liquidity that we aggregate and source is that we will get the best price for our users when they do a trade. So we were maybe the first full aggregator who was really trying to do this concept both with CeFi and DeFi. And what's really happening when you go into our platform is that you, for example, want to do a trade from some Ethereum to DAI, and then you type it into our terminal, and then we have some algorithms and protocols which goes out and source the liquidity, look what is the prices, and then we optimize the routes and the trade so you will get the best price. And maybe not only on one DEX, it might be several DEXs and pools that we split this trade across. Just to give a little background why we built this. So we started in September 2020, where we were a team of around 10, where one half are from traditional finance. They have more than 15 years experience dealing with investment banking, building centralized exchanges, futures exchanges, and so on. And then the other part has been in the crypto space for a long time, building protocols and dApps. When we came together, what we really wanted to solve is, because we saw the crypto market is very fragmented. So there's a lot of exchanges out there, and they have different liquidity, different prices. And as a user, when you want to do a trade, it's very difficult to figure out where should I do that trade and how should I split it. So that was kind of the main reason why we started. And all this information is very asymmetric. So it's very difficult to see in between the exchanges, and therefore difficult to maximize your trade. So yeah, that's why we built it OpenOcean in the first place, and that's still the cornerstone of what we're trying to achieve.
Definitely, and I think from what I know about OpenOcean, you guys are also helping to kind of democratize the market as well, democratize the information so that people can, I think, make better decisions. Based on if there's low slippage, for example, it might enable a different class of users to get involved. Just from your perspective, thinking about DeFi and all of the aggregation you guys are doing, DeFi has been, I would say, something that people kind of use daily as far as checking in on their pools, taking actions daily. To what extent do you think, as more of the information, like as retail users get more of the information, do you think that arbitrage opportunity will disappear for other parties, like institutional companies and funds?
So I definitely think it's like, if you compare to the traditional finances, is more approachable, because you have so many tools and all the information is generally available out there, especially when maybe you use something like OpenOcean. So I said that we do both CeFi and DeFi, so centralized and decentralized exchanges. One of the cool things you can do with that is, for example, inside our terminal, you can see the spread between CeFi and DeFi, and then you can spot like an arbitrage opportunity yourself. And you can also do that in between the dexes if you want. So I definitely think this is something that's easier for retail and normal traders to go in and try to make a profit of. And one of the things we are actually building that I wanted to talk a bit about later, but let's just jump into it now when we are here, is that we are building a SaaS tool for automated arbitrage trading. So right now we have kind of the visuals where you can go in and see on a graph, here's a spread, I want to take some action on that. But to actually do it might be a bit more complicated for some people. So we are building this tool where you can go in and deploy your own strategies, and they will run automatically. And I think that's something, when people, they kind of develop these automated tools for arbitrage, they kept it to themselves because it can eventually be, like a big profit machine. So we are kind of democratizing that we give you the tools, and there will be some guidance, and then you can do it yourself.
Yeah, that's really great. And I think a lot of people talk about arbitrage or even total value locked and compare these sort of metrics to sort of success, I guess. So do you always believe that this arbitrage opportunity will exist? Because like for example, a lot of the DeFi opportunities, whether it's the interest or taking out a loan, that collateral ratio kind of exists because not everyone is in the pool. Like, do you sort of have the perspective that if too much capital comes into some of these pools, it will change some of the interest rates? Or do you think as more capital comes in, it will that there might be more DeFi products for like capital efficiency? Because like in DeFi, you keep wanting to use the capital.
Yeah. Well, I think the market, if we just look at the history, right, it was rather inefficient, and there's a lot of improvements in that because people, they're building these tools and they take advantages of for example, arbitrage. But I generally think it will become more and more efficient, and the opportunities will be less. But I don't think it will belong only to the institutions, just to go back on that, because people, they will keep building these dApps where you can, or like contracts which you can do different mechanisms to kind of maximize your own capital and make the market more efficient. For example, that you deploy some capital, you get a representation of that capital, which you again can deploy and move around, and that will eventually make it much more efficient.
And what makes you excited about kind of the change in business models, like kind of talking about liquidity mining a bit, where suddenly anyone has opportunities to use their capital and provide liquidity, kind of as a LP. Like a lot of these things were locked in traditional finance or centralized finance before. So do you think that the roles of different parties might change in the way they interact in crypto? Like, do you think a trader will just always stay a trader, or do you think like not just VCs will have the opportunity to kind of be LPs in this pool, like specifically talking about liquidity mining, that model?
Yeah, sure. I think like in the crypto space, liquidity mining is for everyone. So depending on the networks and the fees you have to pay, to deposit, withdraw, and stuff like that, there might be, some scenarios where you will need to deploy more capital than others, simply to make a break even or a profit. But I think we've seen more and more retailers and small investors and traders, they're jumping into this, especially because you can do it on other networks now and specifically Ethereum, right, where it's more cost efficient to deploy and withdraw. And the opportunities also become more in the sense that there's more variety, and it appeals to different risk profiles. So for example, now you can also do a single token staking with a stable coin, right, which might be interesting for a lot because it's not as risky as doing staking with a more volatile token, or even go in and provide liquidity, with a pair into a pool which carries significantly more risk, namely the impermanent loss. So I think, there's different options for different risk appetites now, and that really appeals to the normal traders, the users, and that along with the transaction fees being lower in many scenarios.
Yeah, and also to talk about transaction fees, we're seeing like multiple layer 2 blockchains, people starting to kind of trade on those different dexes to also kind of hedge their risk and maybe not pay all these fees. But getting a technological perspective, would you say that all of these innovations, are they driven by algorithms? Is it the innovation in building bridges, swaps for capital efficiency? Or do you think it's just kind of knowledge, one area that you guys are really focused on, giving all the information to the trader? Because I know a lot of people talk about, front running and a lot of the problems here in the industry.
Yeah, sure. So just to back up a little bit, like in OpenOcean, we aggregate 10 different public networks. So under this, it's Ethereum, Binance Smart Chain, Avalanche, Phantom, and so on. What's really interesting here is that all the users, they move around these different networks, and they're not only restricted to one particular network. So may I have the question again? I'm just trying to put it into a context here.
Yeah, so I was sort of asking, like, do you believe, like, what kind of drives the innovation in a lot of the things that we're talking about, like making the markets more efficient? Does that come from a more efficient algorithm that you or other companies are developing? Or is it between networks where they're trying to build bridges to reduce the cost, or maybe bring in liquidity from another chain? Like, which one is it more, would you say, the innovation, the reason why the innovation is happening right now?
Yeah, so I definitely think the networks, they play a role here, right? Because all the different networks, they offer like different algorithms, first of all, right? But they also offer different performance and different features, which might appeal to certain builders, but also traders. And obviously, like the efficiency comes into when you can move around these chains via, for example, the bridges, right? Because you might have a pool of some token on one network and another web network, and they sort of need to balance out that arbitrage somehow. And that could be between the network through a bridge. This is also something we look into, right? That we aggregate so many different networks, and as a trader, you can just come into OpenOcean and you can trade on all these 10 networks. So if you spot that opportunity, we can kind of help you to get the price overview and see if you have an opportunity. Another thing we are building for this is that we are about to launch a cross-chain swap terminal. So what that means is that you can go from one network to the other network and do the swap and get the best price. So for example, if you want to go from Ethereum to Avalanche, and you want to go from ETH to AVAX, you can go into our interface and you select like the starting network and the destination chain, and in the middle you will kind of be able to see the cross-chain protocol and bridges you can utilize for that. So that's just something we put together because a lot of traders, they don't know how to do it practically. But these types of architectures, they can help make the more efficiency into the market, because you kind of build bridges in between these two pools and networks.
Yeah, we certainly need more bridges in the space. I really like the idea of capital flowing across different networks and users getting full options for basically picking the liquidity they either want to provide or receive, kind of at their rates. So do you think, what percentage of, I guess we have, to quickly talk about things like the upcoming ETF and kind of the flow of funds. A lot of those flow of funds kind of stay in the traditional finance or centralized finance ecosystem. So to what percentage do you think people will actually directly interact with a lot of things like future contracts and do that level of trading themselves, versus is it just going to come in the form of a traditional product, I guess, where they can just click a button?
You mean between like the traditional finance and the crypto space?
No, more like, when we talk about things like interest rates and stuff like that, do you think more people are going to take the full crypto route? Or do you think there's a world where in the future you actually go to your traditional bank right now and they might offer a crypto product, but in the back end, it's still like, a decentralized lending platform or something like that? Yeah, so which one do you think it's going to be more? Do you actually think users are going to interact directly with a lot of these lending platforms, or will they do it through these larger institutions that are getting crypto exposure?
Sure. Well, I think it's very interesting when we look at like the world, right? I think it's around 2% or less than 2% which has exposure to crypto already, and the exposure is relatively small. So as crypto grow and we probably will see more of these 98% coming in, I think there's a need for all of this, right? Whether it's like ETFs, traditional finance where they can go to the bank and say, I want some exposure on Bitcoin, or they go directly into the space, go to an exchange, do their KYC, make them manage their keys, or go, the full DeFi route and jump into MetaMask, create an address, and manage everything themselves. I think there will be more on the crypto space, like centralized exchanges and decentralized exchanges, rather than going into the bank and buy a ETF. The ones who will buy the ETFs and the traditional financial instruments and so on, I think that would more be maybe the elder generation, which are not so comfortable, going in and create an exchange accounts and even a DEX account and have your own control of it. I think the maybe slightly younger generation, I'm not hoping I offend anyone here about this. I'm sure there's a lot of technological good people out there in all generations, but I think the younger and the ones who kind of grew up with the idea about crypto, they learned about it on YouTube and all that, they are more ready to go in and create a centralized exchange account, or even do it themselves with, for example, a MetaMask. And I think that, when we talk about this CDeFi, so centralized and decentralized exchanges, that's really interesting for the growth, because we will need both of these parts to onboard the remaining, let's just say 98% of the population into crypto, because some people, they might not be so comfortable managing their own keys. They want to do KYC because they feel that's a better way to be compliant. And then we also have the full DeFi route, where you just create your own, you have your keys, there's no KYC, it's privacy, you can get access to the new projects when they just fresh on the market a lot of the times.
Yeah, definitely. And I think to add onto something, I think for the future of kind of crypto investing and how people even get involved, I think it should very much revolve around doing it in a communal way, like in a either group investing to diversify risk. And I think that might be one of my questions to you is, what effect will the idea of, I guess, pooling your capital together with other people, like we've kind of already seen it, right? These are permissionless pools. You can kind of go in and out of these pools on your own will. But to talk about the social side of it as well, like, do you think what effect will it have on just the trading markets if we start to see smaller groups of people like creating their own smaller pools and trading, kind of like what we saw with the Wall Street bets movement, where a bunch of people put trading pressure? Is it possible for decentralized groups of people to use these tools to push back on a lot of the problems in the ecosystem, like front running and things like that that people always complain about?
Yeah, I think so. I mean, that's one of the most powerful things we've seen in blockchain and crypto, right? That people get together in communities and they even run projects, projects which are more of a DAO system. They are like controlled and run by the users. And I think specifically for, you mentioned like if they go together in pools and provide liquidity together and so on, I definitely think that will push back on some of it. One of the things here is that, the intentions might be good, and they are in communities and they probably talk and like each other and so on, but they in most cases would be anonymous people, right? So you can only, the community is often very powerful. And I see so many better cases than worse cases. But I just think when you have these things, I wouldn't rely 100% on it and put my full faith and trust into it, as long as it's run by 100% anonymous, and especially if it's run by few actors, right? If you saw something becoming bigger with that kind of network effect, I would trust it more. I think that's also a bit of a personal opinion from me, how my risk profile is, and what I like to be part of and contribute to.
Yeah, I mean, no, it's always interesting to get the personal belief. Everyone has different beliefs. Everyone's metrics are pretty different, right? Whether it's new people getting in, and people that have been in the space for a while, like you, definitely have different metrics for a good reason. I would be interested to hear more about OpenOcean. What are some of the interesting features you guys are building in the future? Do you guys see a world where you might want to show people addresses that do participate in front running, or is there a way, do you think, through more data we can maybe build a dashboard to help people be more trusting of protocols or pools or anything? Like what data would you want to show them? Like I don't know, what metrics do you think are important for trust and safety?
Yeah, so I think for trust and safety, right? So OpenOcean, we are an aggregator. So we tap into liquidity in different pools. And the front running problem, the way we try to tackle that is that we talk to the decentralized exchanges that we aggregate. So it's not, you cannot just tap into any liquidity on OpenOcean. We have a process where we whitelist the DEXs, or we approve them, right? Based on our due diligence, and the same goes for the trading pairs, and that's kind of how we try to mitigate that problem. Just for other safety concerns, when we talk about OpenOcean, that is that we audit all our protocols, all our contracts, and it's by third parties, it's by internal. We use as much as we can from other communities and projects, which has been battle tested along with our own proprietary. Yeah, and so about the future products and features we're developing. Right now, our primary thing is aggregation, right? And it's free to use, which is another nice thing about OpenOcean. In the future, we have kind of a few products coming up. I mentioned the SES tool already. Then we are gonna aggregate decentralized derivatives, which is something very new. We are extremely excited about. So, spot trading is very popular, but we see in the future that decentralized derivatives, or just derivatives in general, like futures contracts and perpetuals, will become very large. So we want help people get the best trade on that as well. Then we will do a combined margin pools, which means that you can have one margin pool which you can utilize to open positions on different exchanges. And here we talk both CeFi and DeFi. So for example, you could go long on one place and short on another place and utilize the same margin on that. Then we talk about the cross-chain protocol, which we will also launch soon. And last, we are gonna launch an intelligent wealth management tool. So this is something people can access, and they can choose a strategy which fit their risk appetite, and we can sort of help them to get a profit out of that based on the risk profile. So all these services or products is also something which we will try to get some revenue streams on. And on OpenOcean, we have our own token called OOE, which is a governance and utility token. Some of these products will be accessible. For example, if you hold a certain amount of OOE, then you'll automatically be granted access to that, perhaps in different tiers. Some of them might also be something where you pay a subscription fee, which you could pay in OpenOcean token, not at a fixed OE price, but like something that will be pegged to a dollar price. Yeah, so that, and now we talk about the token. So I said it's a governance and utility. We are slowly moving towards the governance perspective, where we want to involve the holders and the communities more and more in decision making, so proposing and voting. The token is only 6 months old, and building governance is a long route, and come up with DAO ideas and so on. Then for the other side of the token is the utility. We are also working with gas refund programs, right? So when you do trading, you can get gas refunds in OpenOcean token.
That might be one of the best things that I've heard all week, honestly. Yeah, we need more programs like that either subsidize the gas cost for the users, or change the initial experience, right? Like if you're crypto native, maybe you lose some gas, we understand, but for the outside people, I agree, it doesn't really make a lot of sense, right? You talk about all this opportunity, and then people are paying high gas fees. That's why it's exciting that you guys are also expanding to different chains. And one interesting thing I wanted to ask you as well is, you kind of mentioned that people can spot arbitrage opportunities. Is there a way right now where users can share these insights with other users? And do you imagine, like, is that where the future of OpenOcean is heading? Like sharing of different strategies and getting rewarded for that? Or are you guys going to focus on, because I know you guys launched OpenOcean Atlantic recently, made some progress with the capital efficiency and cheaper prices.
Yeah, sure. Yeah, so for the arbitrage, since day one, we actually had the graph which shows the spread between CeFi and DeFi. So very practically, you can go into OpenOcean.finance, then you say start trading, and then go advanced, and then you will, for example, go on Ethereum, and then you can choose a pair, and you can see what is the prices on CeFi, and currently that's Binance spot trading. Then you can see what is it on layer 2. So Loopring, Arbitrum is about to come, and then you can see what is it on the DEXs. So then you have like all these price informations, right? And you can see where's the best price. Am I a guy who wants to trade on CeFi, or I'm hardcore DeFi users? And then kind of in the middle, we have a graph which shows the CeFi, the DeFi, and the spread, right? So you go in there and you can see in a nice visual way, here's an opportunity. Let me see if I can do it manually by myself, or do I want to use OpenOcean's SaaS tool for that? So you also mentioned the Atlantic upgrade, and that's actually the biggest milestone we had since we started. With the Atlantic upgrade, we improved our intelligent routing algorithms. So it finds better routes, and it optimizes the maximum return on your trade. And what's really interesting about the new upgrade is that we take so many factors into account to give you the best returns. So we look into the prices, we look at the gas prices, we look at the routes, and then we put all these things into like this optimization algorithm, and it will provide you the best return on your trade, right? So for example, certain chains, it might not make sense to split the route too much because the gas fee will simply eat up the profit that you will get from just doing a trade in one pool. Whereas other scenarios, gas fees, they're so cheap that you can split the routes into so many different dexes and even different pools and pairs that will make sense because you get so much better price from splitting it in so many routes. So yeah, that's something we worked on for a really long time, basically since we started to do this next upgrade. And we did a lot of testing on it, and it seems like we are providing the maximum returns, and it outperforms a lot of the other aggregators out there. So we are super excited about that, and that's what we are full speed on now to help our users get in and utilize that.
Yeah, thank you so much for going over that. I truly believe what you just mentioned, the people who are watching, you guys should listen to it again. It's very innovative, especially you guys are thinking about all these different properties and metrics, which I don't think everyone is thinking about, honestly. A lot of the aggregators, they only show you, I guess they might show you a cheaper cost, but I get what you're saying. You guys are actually thinking about different metrics that normal user might not think about, and I think that's what really gives it its power. And I love the idea of more information and letting users decide. Yeah, I want to give you opportunity to, like, how can more people get involved with the project, and any shout outs or any upcoming events you want to get more people involved.
Sure. Yeah. So the easiest way to get involved is to join our Discord and go into OpenOcean.finance and try to play around with it. It's very intuitive after the upgrade. We made some major changes in the UI UX. So I think even if you are new to DeFi, you would be quite comfortable with it. And then join our Discord. I mean, I'm in there all the time talking to the communities. Our engineers, they're also there because we provide an API. So if you wanna, develop your own stuff, try to use our API, you can talk to them, talk to me. Yeah, and then if you're more looking for, generally what we do, then Twitter is always good, Telegram and so on. We also have amazing people in Telegram chatting around about different topics, not only related to OpenOcean, but also many of the things we talked about today. So coming up on OpenOcean, I would say it's pretty interesting, all the products we have coming up, right? SaaS tools, combined margin pools, derivative aggregation, and so on. So definitely stay tuned for that. We are also working on aggregating new networks. For example, Arbitrage is something we are looking strongly at, and I would expect to communicate something about that soon. But we also look into other networks, right? So we are the aggregator which by far aggregated the most networks, because we want our users just to be able to go in and trade on the newest stuff all the time and get the best trades. So we have these 10 networks already, and we are talking to some of the new networks that's coming up and being very popular, because we have seen, right, this where communities, capital, hype has jumped around the different networks. And we want our users to be able to, ride on that if that's what they want. If they think that's interesting to get exposure to all these new networks and trading pairs, we are happy to do it as long as it's within our due diligence and we can stand in for it. So yeah, stay tuned for those new networks and join OpenOcean on that journey. We will most likely be the first one to jump on the new ones. Then I think one of the things we're really excited about is NFTs, metaverse, DAOs, and so on. And we are talking to these projects when they pop up and see how we can work with them, get them involved, and so on. Yeah, so I hope that gave a good overview of OpenOcean. And after all, it's free to use, right? OpenOcean. We don't charge any protocol fees. So if you go in, type in your code, you can see where does it split my route, where's the different gas fees, which is charged by the network, not us, and what is the different trading fees, which is charged by the exchanges and not us. So yeah, why not, if you can save a buck and make your trading more efficient and maximum return.
That's a great way to end things off, right? Like why not if right? The question is why not if you had all the data available. Mathias, I think you guys are at OpenOcean, you guys are truly building something unique. I haven't heard anyone build this massive aggregator, and love how much emphasis you guys are putting on building this for users and user control. It was a pleasure speaking to you here, and I advise anyone watching this to definitely check out OpenOcean, get involved. Definitely some alpha and some insight here. Looking forward to seeing what you guys roll out in the next few months.
Cool. Thanks a lot. It's been a pleasure. Looking forward to see the rest of the talks.
Thank you. And on that note, I'm your host, Roshan, everyone, and I'll let you all tune back in to Reimagine 2021. As usual, follow our YouTube library. We've done over 500 plus interviews. And I'll let you all enjoy the rest of the talks here at Reimagine. Thank you.
Thanks a lot. Bye.